congratulations if you stuck hold on to Alibaba for all these years, because you're starting to see a resurgence, baby. Alibaba is on its way. Congratulations to you. And I have told you this a long time ago, the stock is valued and it's still super, super duper undervalued right now. It's a stock that you can still buy now, and I believe you will do well into the future. Whether it go bananas, I don't think so. It's going to be a solid stock for the future because its growth rates are not out of this world, and that's the only problem you have with Alibaba, that the growth rates is the problem. If they could somehow accelerate growth rates somehow and really push up, and then maybe we're talking Amazon sort of stuff. But a long way to go for Alibaba to get to there. But anyway, let's have a look at what's actually been happening with Alibaba. Up 150%. Woo! Very impressive to see that's skyrocketing over the last little bit of time. So we're seeing a big resurgence in the stock. So what does the future hold for this company here? So in today's episode, Alibaba's business model, we'll just take a small step into it. It's a more bigger demo than what I'm going to produce, but just giving you an idea. 2 positives and 2 negatives of Alibaba in terms of the future growth of this company. And then we do a deep dive into the financials of the company. We'll do a stock analysis. And if you stay with me right to the end of the video, you will get the intrinsic value of Alibaba, and you might be shocked. But if you've seen my videos before, you won't be shocked. Alibaba is potential steal deal. Yes, I'll put it out there already for you right now. But you have to stay tuned to find out. So yes, Alibaba. Let's get to it. Let's see what the future holds. Remember to like and subscribe to the channel if you like this video. Let's get to it. Alibaba stock analysis and intrinsic value. Welcome, guys and gals, back to the channel. Let's get to it. Alibaba. What is happening with this company? What is this company all about? And what is the business model? So Alibaba is a conglomerate Chinese company that is, in the last 5 years, it has been all downhill generally. In the last couple of months, you've seen a bit of celebrations, but it's nowhere near the 150% it needs to get to. Yes, sorry about earlier in the video. 150% is where they need to get back to all-time highs. That's what I was supposed to say earlier on. But that's all right. We got there in the end. But what do I see the future here with Alibaba? What do I see? What is this company doing? Let's have a look at what this company is doing right now. So the company itself, what has been impressive about this company here is that Apple is coming involved. Yes, Apple is involved now with producing AI chips, AI features for the iPhones in China. So for the iPhone in China, you're going to see a lot more of the Alibaba figure in it. So exciting with Apple involved. So that's very much a positive for Alibaba. We're also seeing the much improved part of Alibaba with early reports that are coming out that there's going to be a bonanza, and you may see more price go up if they beat on sales. So that's a little bit of what's happening right here, right now. But let's get to it. What's this company about? So Jack Ma, he was the CEO and started this company in 1999. And it's turned into a global leader in the e-commerce and technology space, with e-commerce, cloud computing, digital media and entertainment, and financial services all key parts of this conglomerate. And there is more, but this is the key components. Alibaba makes its money from transaction fees from merchants, advertising sales, and cloud computing with service subscriptions. So they're doing very nice in that space, and it's nice general income, but they've got to try and make it explode. So adding Apple to this partnership looks like it will be all up and away for Alibaba going forward, or potentially not. But yes, the Apple partnership, with the talks of that all happening, a 3-year high has happened. Yes, they have skyrocketed, a 3-year high. So those 3 years of pain is starting to take off. Or is it just a short-term experiment and then, back down? we will see. Expansion. What is happening? What is happening with this company? What are they doing to improve the growth of this company? So expansion of cloud computing. Cloud computing is a significant growth place for this company. They currently sit fourth on the list at 7.7%. So well behind Amazon at 31%, Microsoft Azure 20%, in terms, and Google's at 11% for market share. So they want to get that up to 10% at least. They can get it up more. They really want to push that part of the market because there's a lot of money and simple, easy money in that one compared to the other spaces with e-commerce, which is a bit more high intensive labor cost. So that's where the big money can be made for them if they can get themselves rocking and rolling. So that's sort of where the positive growth is for this company. But what are some of the negatives? What's happening? Well, there's regulatory issues the company has been fighting through, and hopefully it might go through, but they don't want conglomerates in China. That's been a big thing in China. They don't want a whole lot of people just putting the big things in. So that is a question for them with the geopolitical environment out there, the Trump versus China thing. That is still a work in progress. Also, fierce competition has come into the space with JD.com and Pinduoduo. Sorry, this absolutely got that wrong, but they are gaining more traction with their cost-effective alternatives and penetration into unserved markets. So there's a lot of the market that Alibaba still hasn't got into in China, and that's what's happening, the cut costs of these other companies. So some work to be done there in terms of the future of this thing. So a lot of competition out there. Can they push forward Alibaba? That's the question mark. Can they continue to be innovative? Like that has been the problem with a lot of companies, especially like Apple, likes to just not being innovative, and they're just struggling. Their stock price is struggling. They need to find ways to keep pushing their growth rate up. If they can find ways to push their growth rate up, the revenue up, then you might see Alibaba soar. But still some work to be done. You need to see this more and more consistency. Yes, so, well, that's a bit about Alibaba and where it needs to be. It wants to push to get up towards Amazon. We will see if they can do that in terms of finance. They need to do some more work. Well, yes, we've come here and we're going to look at a stock analysis right here, right now for Alibaba. What's happening? What's the financials actually saying about this company? Is it a great buy? Is it a stock you should continue to hold or potentially buy if you haven't? Not financial advice, but I'm just giving you some education so you can make a sound decision. So yes, Alibaba, the current stock price is around 125 at the time of recording, with the 52-week range of $68. If you got on that, congratulations to you. Or $130, well, you're just about there anyway. Earnings per share are 8.67, pretty good, and PE ratio of 14.64, so it's a solid company. But is there enough growth? Maybe you want that to lift up double if you want to see a bit more excitement in the company. Maybe there's something they can improve on. Dividends of $2 at only 1.58%, so that's pretty low. Short interest of 2.18%. Market cap of around 287 billion. Shares outstanding 2.26 billion, which is down 4.4% on last year. Wowza! So Alibaba knows how to do that stuff, right? So, but then when you look at the return on invested capital, only 7%. So this is when you start getting into the, yes, it's a good solid company. It needs to ramp that up if you want to see more explosive. Free cash flow of 100 billion, very good. So there's a lot of good things happening with Alibaba and not much negatives if you look at most of these things out there. But maybe negatives is that they are in China and people don't want to get involved in China. But I'm going to talk about that more shortly for the end of this video. But we've got to get to the revenue. We've got to get to the big bucks, folks. The revenue, got to look at net profit and check out what's happening in that space. So Alibaba's revenue right here, right now, annually is around 137 billion, from 130 billion to 126 billion in the last couple of years. So they've gone up, but not much. Net profit's similar sort of thing, 12 billion from 11 billion to 10.5 billion. So they've been growing, but not at world record pace. More like 10% sort of stuff, or a little bit higher. Not big enough to make a world-changing thing. So that's where they need to improve. But if you look at net profit, for instance, 466 million 2 years ago, 3.3 billion to 6.2 billion. That's nice. That's very nice. They do that again and go to 12 billion, and then this company will start talking. I don't think they'll get to 12 billion, but if they get to that's the quarterly revenue. If they got the quarterly revenue up to 12 billion, that's why you're seeing a bit of excitement with the Apple announcement as well. But if they went to 12 billion, this stock could be $200. I'm not kidding you. This stock could be $200 if they hit next quarter 12 billion. Woo! I don't think they're going to get there, but if they did, got anywhere near that, look out, this might be off to the races. Very important to look at all this. Total assets, 251 billion, with total liabilities at 100 billion, up a little bit from last year of 90 billion, but that's not bad, and very much in line with other companies around there, so that's not a major concern for me. But how much can they produce in the e-commerce and the computing sector and even the financials? They really need to ramp all these up to continue to grow, and they need to grow a little bit quicker if they want to get more people invested, because in this day and age, a lot more people are getting into technical analysis and a lot of other things to try and make their worth. So let's check out a bit of some technical analysis now with intrinsic value. Totally opposite, but this is how you can invest. We're going to look at the bear case, we're going to look at the bear case, we're going to look at the optimal case, flying to the moon and absolutely preposterous, out of this world sort of figures for Alibaba, and see where we end up here in this intrinsic value. So we can look at the current share price, earnings per share, growth rate, calculated with the bond yield, which changes all the time, and intrinsic value, and boom, we get the intrinsic value depending on what's happening and whatever figures you put in. So let's have a look at a bear case for Alibaba. Say they go backwards a little bit. At the current share price, 125, and earnings per share of $5, and 10% growth rate, which is roughly where they are at. Not quite where they are now, but below $148. That is above what the current price is. Wowza. And this is a bear case fix. Base case, earnings per share goes up to $10, just above where they are now. 10%, you can say roughly, well, this is where they are right here in this moment. 10% growth rate, could say 11, but you're looking at just about $300 stock. Just about $300 fix. I'm telling you now, it's time to buy. Buy. Not financial advice. Optimal, 125 at $15. We're going to tell you why, and maybe not necessarily the greatest buy, but I'll tell you soon. So optimal, 125 at 15%, at earnings per share of 15, you're looking at $602. Woohoo! And if you think this company's going to more than double to earnings per share to $20 at 20%, you're looking at $1,000 stock, folks. Woohoo! And if you think they're going to smash it to earnings per share to $25, which I think they'll do, but the 25% average, I don't think they'll do. But if you think they can do it, 1,500 from here. So what does this all mean? You should just load the boat. I don't know about loading the boat, but if you want a stock that is going to be consistent, put it away. Like an index fund, this is the stock for you. I think over time, you'll see it nicely. It probably hasn't done that over the last 5 years, but I think the future, it'll do just as well as the index fund. Do I think it's going to do much better? No. If they can find a way to grow it, then yes. But in terms of value propositions, it's absolutely a steal deal. But the preference on this though is some stocks are always undervalued. And Alibaba is one of those, with the likes of Meta. There's a few stocks that just don't quite get all the echelon compared to Apple. Apple seems to always be higher than the other ones, and compared to where they're overvalued most of the time. So it's just, you just got to remember that with Alibaba, it's always going to probably be undervalued most of the time throughout its cycle. So you just got to put that into the price range. So they're saying it's worth 300 million, and it's at where it is now. I'd say buying under 200, you'll be pretty much safe going into the future, I believe. And easily you'll double up, if not double, 3x. To say it's going to fly to the moon, it's just been silly dilly. It's not going to happen unless they just come out with some product that takes over the world. And that's pretty much what NVIDIA has done. Tesla done beforehand, unless you find something, and it's always not necessarily always long term. That big gain happens in a year. Palantir's in that process at the moment. Will it continue to fly? That is the question mark she's got to say. But in terms of Alibaba, this is a solid stock that has had its ups and downs of late, but it should start creeping up, I'd say, from here, as long as they continue to grow. Obviously, if they don't grow, you need to go out the back door, cancel your subscription, get out of here, go on to something else. But if you want a solid company for long term, this is a company for you. If you're more in the high risk stakes, I would stay out of this company and look for something else. But if you want consistency, Alibaba should be consistent over the next 10, 20 years for mine. If you look at the growth rates and everything it's been doing recently, there's always a China exploit of being the Chinese company, which doesn't help as well. That's something else you've got to think about, why the stock is always lower as well, because then the American big investors don't get involved as much. So that's Barry Charles for this episode of Alibaba Stock Analysis Intrinsic Value. I'll be back each and every week on this channel with another video for you. Have an awesome day out there.